If you make a broad investment in the stock market, you might actually be invested in fewer stocks than you think. In fact, you might have a lot more exposure to these 20 companies. Let's dive deeper by looking at the S&P 500. First, when people talk about how the stock market's doing, they typically measure that through the S&P. It tracks the performance of 500 of the leading public companies in the US. Billionaire investor Warren Buffett has often said, if you want some broader exposure to the stock market, just buy an ETF tied to the S&P 500. But the S&P gives the most weight to the companies with the biggest market value. For example, all these tech companies are worth more than $1 trillion, and they all have the biggest values within the S&P. In fact, the 20 most valuable companies out of all 500 account for 45% of the index. Now, there have been a lot of points throughout history when just a small number of companies represent a big part of the S&P. And it just means that if some of those stocks which have been hot cool off, the broader index could cool off too. That's assuming the other 480 companies don't pick up the slack, which if they do, could keep the bull market intact.